First of all, why exclude Tesla, Larry?
Well, we just view that more as a consumer-related company, not as much your traditional technology company. And then when you do look at the earnings of that particular company, there's a little bit more volatility associated with it than the typical mega cap names that we see. So for the most part, we've excluded it since we've been doing this for the last couple of years.
Well, I mean, I'm not going to get into a whole thing about it, but they do, with all of the robo-taxi, self-driving stuff, I think probably more of the market cap is tech-based than consumer-based.
I mean, that might be the case, but ultimately they sell cars. And that's the number that most, when Wall Street looks at, how many are being delivered, et cetera. So we just feel that if you look at the broader scope of where tech is going with AI and not just looking at it more from a singular focus of cars, I think it's more important to look at the broader tech space. And plus, we have more of a history of what they've been able to do, what they've been able to do with their margins when it comes to reinvesting and looking for that next great technology to come out. They've been much more keen to do buybacks and dividends. So those companies that we tend to focus on, those top six, tend to have more in common than with the other company, Tesla, that you mentioned.
So is this underperformance so far this year just a blip, or is it a larger breakdown?
I actually think it's a blip. It's one of our favorite sectors as we came into the year. One of the reasons why it's so important for us is because when we do our survey data with clients every quarter, believe it or not, technology is the favorite of 75% of our clients. That's pretty big. The next closest one is around 50%. So it is a sector that everybody has a lot of interest in. I still think that it will continue to do well going forward. When I look at its earnings growth, you mentioned earnings growth this particular quarter. We still have those Magman stocks growing their earnings at 27%. That's versus 10% for the rest of the market. And they're expected to continue to outpace the broader market for the rest of this year. And then the one thing, contrary to what a lot of people think when they talk about valuations, when I look at the valuations of Magman, it's approaching the lowest levels that we've seen since 2018.
Really?
So I think it's getting much more attractive from a valuation perspective as well.
So you think people should just be buying hand over fist? Don't worry about, the pivot to healthcare. Don't worry about the pivot to, I don't know what else, financials.
I wouldn't say hand over fist. I mean, we do believe in a broadening, but when I say broadening, I mean other sectors will perform just as well or similarly to technology, right? I do think that technology is going to continue to dominate. Remember, those Magman stocks represent 30% of the S&P 500, so it's a very big portion of it. One thing I would mention, though, is that they only represent about 23% of the earnings. And the significance of that is that you have to continue to see those earnings continue to grow so that Magman actually grows into its weighting within the S&P 500. So that's why it's so important that they have to continue to drive this earnings momentum going forward.